Hey, it's Nancy from Nancy Chu Homes. I'm a realtor here in northern New Jersey, and in my 19 years in real estate, I have sold over $500 million in real estate. Okay, you guys ready? It's been a really interesting week because I was having a conversation with a client of mine, and she was saying, things are so expensive, blah, blah, blah. And then she started, mentioned her house and pointed out that, she was still paying PMI on her house. And I thought to myself, still paying PMI on her house. I have an idea, and I think I might be able to help you get rid of it. Okay, so here's a little trick, and I'm going to give you a sample house, and I'm going to tell you a little bit about how we did it, all right? This really only works with conventional loans, unfortunately. It does not work with FHA because FHA loans, the PMI, which is the mortgage insurance, unfortunately sticks with the house through the life of the loan. So the only way you can get rid of it is by essentially doing a refinance. But for those of you that have conventional loans with PMI, because you put in less than 20% down, there's actually a way that you can contest that PMI now. And I'm going to show you how. Here is an example house of how we did it. This particular home was bought in 2021 by a client of ours. The purchase price was $360,000. They did a $50,000 down payment, which was a 13.89%. And the mortgage was $310,000 at the time of purchase. Now, once again, this was a conventional loan, okay? This only works with conventionals. So the client's PMI payment was $36.70 a month. And while I know that doesn't sound like a lot, given the cost of eggs, I was like, hey, if we can remove your PMI, you can buy eggs for the week or for the month or whatever. It's kind of a joke, but unfortunately, it might actually be true. So as of April of 2025, don't forget she bought this in 2021. As of April of 2025, she'd already made payments, and her principal balance on this property was now $289,070. Oh, let me repeat that. $289,070. So she paid down a bit. Her particular mortgage at this point was with Chase. And so, we reached out to Chase to find out how she could contest her PMI. And according to Chase, they want you to prove a 75% loan to value ratio. Okay, now what does that mean? I'm going to try to explain this, okay? And hopefully I do a good job. It basically means that you need to be able to prove to your mortgage company, in this case, Chase. Don't forget, every mortgage company really probably has their own, their own metrics for how they do this, but this was for Chase. And Chase is a pretty good standard across the board for how banks behave. We had to prove that my client's cash position in the house was worth 25% of the total value, the total current value of the home. Okay. So while she'd only put down just under 14%, she'd also been paying it down. But there's a little trick. And that trick is, since she bought the home, the value of her property has actually gone up quite a bit. And so I thought to myself, if I can prove that her cash position in the home is now a quarter of what that home value is worth, then she can contest that PMI and have it removed. So here's what I did. I took that current loan balance of $289,070 and I divided it by 0.75, right? Because I'm trying to calculate the value that I have to prove in order to prove that we have 25% cash position, not only with our down payment, but also with the money that she's already paid into it, as well as the growth of the property. Well, here we go. After that, I decided, doing that calculation, that she needed to prove about $385,427 as her current value in order to have that PMI contested, right? So here's what I did. I pulled comparables. let's have a look, right? Comparables. Let's talk a little bit about the metric of comparables, just so you know. The sales should be recent. They should be relatively close to the subject property in distance. And they should really be relatively close in size to the subject property. It should be sort of a similar property, right? So in this particular case, the property is a townhouse, but it has condo ownership. So I had to look for other properties that were of similar style of ownership. So townhouse with condo ownership, okay? And I pulled the comps. And I ran these comps and pulled up, about, a dozen or so, 10 to 12. And I'm going to show you right now, right here, what we found. So I tried to keep it within 2 bedrooms. There's a couple of 3 bedrooms thrown in here, but they're relatively comparable in size, right? And they're all townhouses with condo ownership. And as you can see, the sale prices for these particular properties of this ilk are now, oh my gosh, they're like 500,000 to like, the mid 6s. So given that I really only had to prove, just under $400,000 of value, I was like, I think this is a no-brainer. And I sent this information to my client. My client reached out to their mortgage company and had the PMI contested, demonstrated that her property was now worth well more than she had paid for it, and she was able to have the PMI removed. From a process standpoint, it really sort of depends on, once again, it depends on the particular lender who has your loan. Or they might say, hey, you have to fill out a form. They might accept some comps. The truth is, most of them are probably going to ask you to pay $150 to have a new BPO, which is a broker pricing option. It's sort of like a version of an appraisal. So they might have to, you might have to pay to send someone out to do a pricing opinion of that particular property. Okay. And in this particular case, they actually didn't even bother because they were so convinced by the comps that they were like, never mind. We don't even need to send out a BPO. But most of the clients that I've been doing this with have had to have the mortgage company send out someone to do a broker pricing opinion. Anyway, so fabulous. At this point, my client is now saving, the PMI, which is what, $36.70 a month. Listen, for the life of the loan, and this client isn't planning on moving. They're planning on staying there. They love their place and they're going to be there for a good long time. And to be able to remove this monthly fee for them, while it doesn't seem like a ton of money, I think in this particular economic environment, any little piece that we can help with to reduce your cost of living I'm just so happy. Listen, if you have a conventional loan, and you're currently paying PMI and you bought your house between 2 to 5 years ago, please, you're welcome to give me a call, 917-992-3098. That is my direct cell phone. Shoot me a text. I'm happy to sort of walk you through and, go through the math and help you figure out what value you need to prove. And if you're in New Jersey, I can probably actually help you prove that value. No, I was going to say, we're just doing this because, like I said, in this particular environment, anything we can do to help our clients save a buck here or there and make their life a little bit better, I'm all about it. All right. Listen, if you find that our videos are of value to you and help you, please do like, comment, and subscribe because it would super help us. I'd love to be able to get our message out to more folks. And like I said before, if you have any questions or concerns and you're holding PMI with a conventional loan, just reach out. We'll see what we can do to help. All right. Thank you so much. And I'll see you guys next week.